the Chinese stock market ETF. First off, read this disclaimer carefully. Then do your good deed of the day by liking and subscribing. So, China, it's in the North Asian part of the world, 2% from the 52-week low and minus 44% away from the highs. We start by looking at the chart. These are weekly data points. This is very big picture, and we can go pretty far back here. We have fallen all the way down to the lows that we faced during the global financial crisis. Let me just draw the line like that. That's a very substantial fall. From a long-term perspective, this is definitively a very interesting level. If we zoom in, we do see that the bears are doing damage for sure. They just are. If we go here to the daily data points, we see that we are clearly below all the moving averages. Even the 5-day moving average here in light blue is a resistance level. So the bears are very ferocious. But after such a very substantial fall, it is also difficult to enter a new bearish position. Going back here to the weekly data points and looking at RSI, we have a very rare RSI reading. We are very oversold. Last time we were this oversold, well, close to this, it was during this low here. That low, it did result in a temporary, that is, rally of 31-ish percent. It was a counter trend rally in a downtrend, but still it was a rally. If we look at the PPOs, which measures the difference between price and these moving averages, we are also very far away, abnormally far away. Accumulation distribution is still rather weak. We don't have signs of buyers yet. And here on the daily data point, we see that RSI and PPO are abnormally low. In my notes, I write that we are oversold on the weeklies for sure. I give the bulls a 3 here on the technicals. I am being a bit modest simply because we sort of expect the bulls to do something, but not much has come to fruition yet. Here is the seasonality for the China FXI ETF. Looking to the right here, over the last 5 years in green, 7 years in blue, 10 years in red, there is some bullishness into the end of the month. Then we do see some weakness into November-ish, but then we do see substantial strength into the end of the year. To the left, over the last 5 years, we do see that November, December, and January especially are more bullish than bearish over the last 10 years like this. We see that October, November, they are strong. And then we go the last 19 years. We do see some very clear seasonality from August into November. So October, the current month, is one of the strongest. November is the strongest month. It closes higher 72% of the time. That is bullish. In this case, I will give the bulls a 6 here on the seasonality. The seasonality is somewhat messy, but there is a clear bullish trend here for China. So yeah, 6. Let's look at the fundamentals. So I am comparing China with America. Yeah, so let's look at the performance. Year to date, China is underperforming America substantially, minus 35% versus minus 22. Price earnings is much lower for China, 14 versus 21. The yield is 2% versus 1.22 for America. Looking at the holdings, finance, tech, pretty big. In America, tech is very, very, very big because there's different tech categories here. Tech services, electronic tech, health tech. So tech is huge in America. I will give the bulls a 7 here on the fundamentals. China is better valued. better yield. You could argue that the sector exposure is also more beneficial, at least for those who are into value. So yeah, let's look at relative performance. There is a 12% long, well, 13% negative long-term correlation with America, and we have 13% positive with the WT, and that is the total stock market ETF. Against Japan, we have 60% positive and minus 88% with the dollar index. Short term, we have 47% positive with S&P 500, 55% with VT, 60% with Japan, minus 69% with the dollar index. So what happens with the dollar index is going to have the biggest effect on the Chinese stock market ETF. It is a negative correlation. So what is uh, if the dollar index were to go down, that would be beneficial for China, for the Chinese stock market ETF. Looking here at the dollar index, we do see signs of fatigue. So over the last 1, 2, 3, 4 weeks, it hasn't made progress. So the bulls have lost momentum. Looking at the daily data points, yeah, some clear like lower highs here. So definitively there is a decrease here in momentum. You see that and when we lost momentum, MACD reached this obscene level. We haven't seen this MACD since back in 2015. So let's go back here to 2015 to draw some lessons. So here you can see back here, you had this obscene strengthening of the dollar, and then it spent, let's actually measure. It didn't make a new high until approaching 2 years later. So massive strength and then just up and down, up and down, up and down. And we do have some similar technical signals here. So that it's a potential future development because the strengthening of the dollar has been extremely bad news for a lot of countries. When you are a reserve currency, you are not supposed to take all the cake by yourself. So it is in America's interest to actually see something similar after what we saw in 2015, to basically just go sideways, to have more stability to the global currency system. So yeah, there are some signs here that we could see more choppy behavior with a primary downtrend for the dollar. Let's compare China with the dollar index. So this is the UUPE ETF. I see some extremely interesting things here on RSI. So these are weekly data points. Previous time we had this reading was here, and it marked a low for China in this pair, meaning it strengthened. Here as well, the same RSI reading. It went a bit lower here. Here, the identical reading, and then we had China massively outperforming the dollar here as well. So the current RSI reading has a lot of history. It's very, 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 very interesting. So yes, there is a reason to expect the China ETF to outperform the dollar going forward. Here we have the seasonality. Um, there's usually more weakness into early December than strengthening. I will give the Bulls a solid 8 here on relative performance. Some extremely interesting signals, especially when comparing China against the dollar index. Long term, we are at an inflection point. We usually see a change when this signal is triggered. So yes, the China ETFs end up with a 6 here in favor of the bulls. The primary entry signal stop loss is that we are oversold. We do see some interesting signals on seasonality fundamentals as well. So all in all, interesting stuff here for China. So we have some time left. Let's look at some of the stocks within the China ETF. We start with BABA, like that. It is quite amazing how many tickers you begin to memorize as you trade in the markets. Because I have a massive catalog now of tickers in my brain. Here is Baba. It has fallen way down to the levels of 2015, 16. The bears are still in control here. Looking at the chart, looking long term, this is interesting, but we don't have any sign really of bulls regaining strength. Let's look a bit at, yeah, the RSI, not really at those I must buy levels on the daily data points. We are at interesting lows, but we don't have that clear sign that, okay, now I can actually just buy Baba. Then we have 10 cents. Ah, I have some 10 cent. 10 cent. There is some delay in my computer after the latest Windows update. Yeah, so 10 cent. Yeah, let's do the OTC. I think, yeah, we get some good data on the OTC. So the OTC, it's over the counter. It's not as liquid as the one traded on the primary stock exchange, but sometimes in this case we do. It seems like we have good data. Here again, what I don't like is that we had the opportunity here to form a bit of a double bottom, but we are now below that level. So it's sort of like, where are the bulls? So we sort of expected the bulls to do something, but they are missing in action. Let's look at the RSI, and yeah, from the RSI perspective, we are approaching a level that long term here on these weeklies, it formed a key low back here. Not a huge win, but at least the sell-off stopped, a bit temporarily. This is back in 2018. So this RSI level then formed a major low. And same thing with the PPOs. Looking here at the green 50-week PPO, the purple 20-week PPO. Looking also here at the daily data points. We are at an interesting sold level here on 10 cent. So 10 cent is interesting, but looking at the chart itself, I don't like that we did not form a double bottom. We sort of were supposed to do that. Next is a JD. Yeah, on the topic of double bottoms, we do have some double bottom-ish behavior here. If we compare this against this. So this is the potentiality of forming a double bottom. Yeah, this is interesting. Let's go back here. No. So there's been some times like back here as an example. Let me just draw it in. You see that here we had a bit of a double bottom formation. Here as well, a bit of a double bottom. So double bottoms, they do have a history here of working for JD. Looking at the daily data points. Looking at the last three candlesticks, if you're looking at the lower end of the candlesticks, the wicks, they do stop at a similar level, which is very close to the levels back here, the lows of March 2022. So it is definitively it's an interesting place to see the bulls step in. It shows us that there is a demand for the stock at that price level. Here on the RSI on the weeklies and the PPOs, and also here on the dailies, there are some interesting signals. So we have looked at various things here for the China. Like we have looked at the China ETF in depth. Looked at some of the underlying stocks. Some interesting patterns here. We definitively have a bearish sentiment in the Chinese stock market, but it is so bearish that it's not comfortable to go short China either, or to go short. Well, to enter new short positions in the Chinese stocks, because they are already at levels that have severely ravaged bears in the past. So when you are at levels that are historically dangerous to the bears, then they are also beneficial historically to the bulls. So that is always the thing when you are in the market. Should you be bullish or bearish? Is a function of where there is biggest risk.